Sir, good evening.
Hello.
Sir, good evening, sir. Am I audible, sir?
Yes, yes, audible, audible. My name is coming against one Mr. R.K. Sinha.
R.K. Sinha. R.K. Sinha muted, sir. All are muted.
Okay.
Sir, that annotation, please take it. I purchased new mic, sir. Sir, annotation you are checking, sir.
Hello.
Yes, sir.
Ananta Krishnan.
Yes, sir.
என்னோட பவர் பாயிண்ட் இன்னும் இது ஆக மாட்டேங்கிறது.
Now in the screen share கொடுத்துட்டீங்க.
ஸ்கிரீன் என்னாச்சு வந்து? லீவ் மீட்டிங் விட மாட்டேங்கிறது.
Yes, sir. Screen share option மேல வருதா டாப்ல?
ஆமா வரலையே. லீவ் மீட்டிங் விட்டு வெளில போட்டுமா வந்து திரும்பி புதுசா ஆரம்பிக்கட்டுமா? இருக்கு. இல்லையே பாதி தான் வருது பவர் பாயிண்ட். டிஸ்பிளே ஆக மாட்டேங்குது. வெளில போயிட்டு வரட்டுமா? வெளில போக விட மாட்டேங்குதே. லீவ் மீட்டிங். இன்னும் ஆயிடுச்சு இந்த பவர் பாயிண்ட். ஸ்கிரீன் தெரியுறதா? தெரியலையா? இருங்க.
ஸ்கிரீன் ஷேர் ஆப்ஷன் வரல.
ஸ்கிரீன் ஷேர் ஆப்ஷனே வரலையே. இருங்க.
But I provided.
திரும்ப will give join meeting. I'm already in a meeting. எப்படி மீட்டிங்ல வெளில வருது?
I can remove you.
ஆ?
I can remove you.
முதல்ல எடுங்க. திரும்பி முதல்ல இருந்து போறேன் நான்.
You will not be able to join the meeting now.
அப்படியா?
இல்ல வேற யாரோ ஸ்கிரீன் ஷேர் பண்றாங்க.
Why it is creating a lot of problems. Screen share option வரலையே எனக்கு.
வேற யாரோ ஸ்கிரீன் ஷேர் பண்றாங்க.
லீவ் மீட்டிங் விட மாட்டேங்கிறது.
இல்ல சார் நீங்க வெளில வந்தது. இந்த ரெட்மி நோட் ரெட்மி நோட் போனதுனால தான் சார். நீங்க ட்ரை பண்ணுங்க.
எங்க?
I will allow you again. இப்போ ட்ரை பண்ணுங்க சார். Screen share you try. Yes, screen share has come, sir. It's coming, sir.
இவ்வளவு சின்னதா வருது பவர் பாயிண்ட்.
நல்ல ஃபுல் ஸ்கிரீன்ல இருக்கு.
உங்களுக்கு ஃபுல் ஸ்கிரீன் வருதா?
நீங்க அப்படினா F5 பிரஸ் பண்ணுங்க சார். இது ப்ராஜெக்ட்
F5
அது தேவையில்லை. ஆனா இதுல வந்து நீங்க ஒன் பை ஒன் ஈஸியா ஸ்க்ரோல் பண்ணலாம். I am able to see your full computer.
கரெக்ட்.
இப்போ நீங்க இது ஸ்கிரீன் வந்து உங்களுக்கு கொஞ்சம் சின்னது வேணும்னா நீங்க
அது என்ன ப்ராப்ளம் ஆயிட்டு அந்த இதுல. சரி
கண்ட்ரோல் மைனஸ்
இவ்வளவுதான் வருது எனக்கு.
இல்ல சார் கண்ட்ரோல் மைனஸ் போட்டீங்கன்னா வியூல
I will leave the meeting and come. Okay? Okay வா?
Okay sir, no problem.
Created the charge creation means documentation. Since Bank A has created the charge on 2nd January, it has the priority over Bank B. Suppose, one more example I will tell. Suppose one bank has registered the charge beyond 30 days. Whereas the bank has registered the charge within 30 days. In that case, you have to see the date of charge registration. For example, Bank A, let us assume 2nd January, they have created the charge, they have executed the document. On 25th, they have registered. Suppose if they have not registered on 25th, let us assume they have registered on 10th February. In that case, whereas Bank B registered the charge on 11th January itself. So if one bank has exceeded the 30 days, then we have to compare the date of charge registration. In that case, whichever bank registered the charge first will get the priority. The third option, both the banks exceeded 30 days. Then in that case, you have to see which bank registered the charge first. Okay, within 30 days, if it is done, both the banks, date of documentation is the criteria. Here, don't confuse yourself with the CERSOI registration. Okay, CERSOI registration is a different issue. Okay, this is with regard to charge creation with the registrar of companies after giving a loan to a company and the assets of the company. What is SERSAI registration? SERSAI registration is done for imposing the SERFASI action. Okay, you know, SERSAI registration has to be done for all cases, including hypothecation, mortgage, etc. Okay, so far for SERSAI registration till last year, like charge creation for company, 30 days time was given. Now that 30 days has been removed. Suppose today you give the loan, you forget to do the SERSAI registration within 2 days, the same day. The next day, let us assume one bank has given the loan, and if they do the SERSAI registration, they will get the priority. Okay, don't confuse between, because in SERSAI registration, the 30 days time is removed. So that is why whomsoever does the SERSAI registration first, they will get the priority. But in the charge creation in the company is a different issue as compared to SERSAI registration. Do not miss the SERSAI registration now, because the 30 days time is dispensed with. The moment you give the loan, so you have to create the SERSAI registration, because even if you forget, within another 6 hours or 24 hours, somebody creates the SERSAI registration, they will get the priority as compared to the other bank. Okay, sir. Now, we are going to question. Yesterday, we discussed up to question number 50. We are going to question number 51. So, question number 51. A bank's total exposure to capital market should not exceed -% of the net worth of the bank as at the previous March end. Okay, so what is capital market exposure? What is capital market exposure? Capital market exposure means loans given by banks against shares, debentures, units of the mutual funds. That is called capital market exposure. For a bank, there are two kinds of capital market exposures. One is bank will give loan against shares, debentures, etc. That is called indirect capital market exposure. Then there is another direct capital market exposure. What is the direct capital market exposure? Direct capital market exposure for a bank means bank will directly invest in shares, debentures, etc. Okay. So total capital market exposure is divided into indirect capital market exposure and direct capital market exposure. Indirect capital market exposure means loans given by banks against shares, debentures, etc. Direct capital market exposure means that is investments made by the bank directly in shares and debentures, etc. Both put together is called total capital market exposure. What is the question here? A bank's total exposure to capital market should not exceed -% of the net worth of the bank as at the end of previous March. That is, a bank's total capital market exposure should not exceed 40% of its net worth. Correct? Fill in the blanks. For the fill in the blanks, the answer is 40% of the net worth that is of the bank as at the end of previous March. Suppose if they ask the question in a different manner, instead of asking, they used to ask. So here the question is, what is the total exposure of a bank? Suppose if they ask the question, what is the direct exposure of the bank to the capital market? Total exposure is 40% of the net worth of the previous March. What is the direct capital market exposure? The direct out of the 40 direct capital market exposure. What is direct capital market exposure? Directly investment by banks in shares and securities. The direct capital market exposure should not exceed 20% of the net worth of the previous year. Both direct and indirect put together, the total capital market should not exceed 40%. Here for question number 51, answer is 40% because they put the question total exposure. If they put direct exposure, then you have to put 20%. You have to see the question and give the answer correctly. Now we are, so for question number 51, answer is 40%. Question number 52. Up to what extent loan against shares can be allowed by banks to individuals? Loans against shares, nowadays loans against shares can be given by banks only if the shares are in demat forms. If the shares are in physical forms, banks will not give loan. So the maximum loan bank can give against shares is 20 lakhs. So for question number 52, answer is 20 lakhs. Question number 53. Bank loans for subscribing to IPO. IPO means initial public offer. Initial public offer. For example, Canara Bank has come out with IPO in the year 2002 November. Till such time, they had 100% capital was with Government of India. So first time Canara Bank came out to the public and they issued share capital. At that time, 10 rupees share capital was 32 rupees. Now you are applied on ESOP, it was around 186 rupees if I am correct. Okay, so IPO means first time a company is coming out for public issue. So bank loans for subscribing to IPOs should not exceed dash lakhs. So it should not be more than rupees 10 lakhs. So question number 53, answer is 10 lakhs. On the other hand, one thing you should know here, if Canara Bank is coming out with a public issue, Canara Bank should not give loan against its own shares. Okay, so that also you should know. So you can give loan for somebody else, so not for somebody, some other organization. For example, if Indian Bank is coming with a public issue, Canara Bank can give loan for people to purchase the shares of the Indian Bank. Canara Bank should not give loans when it comes with IPO against its own shares. Okay, so IPO maximum loan amount is 10 lakhs. Question number 54. Maximum bank loans to employees for purchasing shares of their companies under ESOP. ESOP means employees stock option scheme. That is employee other than for the ESOP of that bank should not exceed 90% of the purchase price of the shares or rupees 20 lakhs, whichever is less. For question number 54, the fill in the blanks is 20, that is 20 lakhs. Question number 55. Banks can allow loans per borrower against specially minted gold coins. You know, gold coins we purchase from the jewelry shops. For example, GRT or many other jewelry shops is there all over the country. People will buy gold coins from various jewelry shops. Against those gold coins, banks should not give loan. Okay, but you know, sometime back, banks were selling the gold coins. Those gold coins were minted by Government of India. That is called specially minted gold coins. Now it is stopped. Banks are not selling the gold coins. So earlier, the gold coins sold by the banks, which were minted by Government of India, against that, even though they are gold coins, banks can give loans as a gold loan. What is the maximum gram per individual? The maximum gram per individual against gold coins is 50 grams. So question number 55, answer is C. So normally against gold coins, banks will not give loan. Okay, against gold coins, banks will not give loan. But if it is India minted by the Government of India, against that gold coins, banks can give loan. The maximum that is grams per grams against an individual, against the gold coin you can give is only 50 grams. Beyond that, you cannot give loan. Okay, question number 55, answer is C. Question number 56. As per RBI guidelines, due to pandemic, if loans against gold jewelry for non-agricultural purposes is granted, what is the name of the gold loan scheme in Canara Bank for non-agricultural purposes? You know, Swarna loan. Swarna, you recently brought out Swarna Express, Swarna Odi, etc., etc. They are called, that is non-agri for gold loans given for non-agricultural purposes. The question is, as per Reserve Bank of India guideline, I am not asking Canara Bank's guideline. As per RBI guidelines, question number 56 we are discussing. As per RBI guidelines, due to pandemic, if loans against gold jewelry for non-agricultural purposes is granted, the loan to value ratio cannot be more than 90%. Okay, you have to take the first fill in the blanks as 90%. This is applicable till 31/3/2021. After that, the loan to value ratio should be only 75%. This question will come. because this is a recent guideline issued by RBI. As per Reserve Bank of India guidelines, what is the loan to value ratio for gold loans given for non-agricultural purposes? Today, it is 90%. This is valid till 31st March 2021. It will be reduced to 75% from 1/4/2021. Okay, this question is an important question. Then question number 57. In exceptional cases, loans against deposits of other banks are to be sanctioned by branch in charges, RO head CAC, DGM COCAC. No loan can be sanctioned. See, generally, loans against deposits of other banks are not sanctioning. But as per your VSL manual, so what it says, on exceptional cases, if you want to give a loan against deposits, after noting the lien in other bank, the DGM CAC of the CO is empowered to sanction the loan. Okay, DGM COCAC. So the answer for the question is, that is answer is C. Question number 57, answer is C. Question number 58. Maximum loan a bank can pay against partly paid share is 50% of its market value. True or false? Before that, you should know what is a partly paid share. For example, Canara Bank has come out with this share issue for the public, for the employees, maybe in the last year. It was fixed, let us assume 186 rupees or 185 rupees per share. Bank will tell, suppose if the bank at the time at a lot you have paid the 186 rupees. Suppose if the bank say at the time of application you pay 25%. Then first call means subsequently after 30 days, you pay the balance amount. So first how much you have paid? Maybe 50%. Out of 186 rupees, you have paid this much. Maybe after 30 days, that is the first call. After 30 days, the balance amount to be told, the balance amount to be paid. If the bank has prescribed like that, first let us assume, first you have paid. That is, for example, somebody has subscribed to the share, first they have paid 50%. So when the second call comes, they have to pay the balance. Only when the balance is paid, so the entire share belongs to that individual. Till the balance is paid in the first call, if the person has not paid the balance amount, then the share money, first money, what he has forfeited, what he has paid will be forfeited by the bank. Okay, so partially paid share means if the share amount to be paid in stages, at one stage or second stage, if it is not paid, it is called a partially paid share. That is, in the case of a partially paid share, that is, if it is not fully paid, the money will be forfeited by the share issuing company. That is why no bank will give a loan against a partly paid share. So the answer for the question is false. Maximum loan can pay against partly paid share is 50% of its market value. That is false. No loan can be given against a partly paid share. Question number 59. Banks are not allowed to grant loans on the security of their own shares is as per which act? This question also they are asking, maybe 3 to 4 or 4 to 5. You are able to know, even 2 to 3 or 2 to 3 also. I told you in the beginning itself, banks cannot give loans by taking, that is, what is the charge bank is getting in the case of a paper securities like shares, it is lien. Okay, yesterday we have seen. Okay, bank cannot take its own shares and give loan. Okay, that all of us know. Under which section of which act it is told. This is here 4 options are there. A, section 10 of the RBI Act, B, section 10 of the BR Act, C, section 21 of the RBI Act, D, section 21 of BR Act 1949. Question number 59, answer is D. As per section 21 of BR Act 1949, banks are not allowed to grant loans on the security of their own shares. Okay, this is as per Banking Regulation Act section 21. So answer for question number 59, answer is D. Question number 60. As per RBI guidelines, what is the maximum loan that can be granted against gold jewelry to non-agriculturists? Options are 1 million. 1 million is equal to 10 lakhs. Yesterday I told you. Options are A, 1 million, B, 2 million. 2 million means 20 lakhs. C, rupees 50 million. 50 million means 500 lakhs. D, none of these. So what is the maximum loan you are giving in Canara Bank for non-agricultural purposes, gold loan, Swarna, etc.? The maximum gold loan for non-agricultural purposes in Canara Bank, we are giving only 20 lakhs, either Swarna Express or Swarna OD or Swarna, all put together for an individual for non-agricultural purposes as on date in Canara Bank, it should not be more than 20 lakhs. But what is the question here? We are not asked what it is given in Canara Bank. As per RBI guidelines, question number 60. As per RBI guidelines, what is the maximum loan that can be granted against gold jewelry to non-agriculturists? Here, the correct answer for the question is none of these, because RBI has given discretion to banks. If a bank wants to give even 100 million, they can give against gold for non-agricultural purposes. But in Canara Bank, we have fixed the limit of 20 lakhs. So for question number 60, answer is D. So you have to read the question very thoroughly, whether it is RBI guidelines or whether the guidelines in your bank. The question is very specifically, whenever the questions are very specifically told it is RBI guidelines, you should give only RBI guidelines. Otherwise, your own guidelines you can give. They have framed the question very neatly without any ambiguity. Okay, so for question number 60, answer is D, none of these. It is the discretion of the respective banks. Question number 61. What is relevant with regard to obtention of land records for agricultural gold loans in our bank? Okay, you have to obtain loan record. So I hear some people are telling, so sir, we need not obtain because interest subvention is removed. So many discussions are coming up. Let us see the correct answer now. What is relevant with regard to obtention of land records for agricultural gold loans in our bank? Question number 61 we are discussing. Point number A, dispensed with since there is no interest subvention available. B, to be obtained for loans above 10 lakhs. C, to be obtained for loans above rupees 1 lakh. None of these. What for you are giving gold loan for agricultural purposes? For three purposes, three product codes are there in Canara Bank for agricultural purposes gold loan. 842, that is for crop cultivation. Another product code for land development, that is another product code is there. One more product code is there, that is also I am not talking about agricultural OD, this is agricultural gold loan. So for crop purposes you are giving an agricultural gold loan, you are giving gold loan for land development, you are giving gold loan for allied activities. So various LTV ratios are furnished by the bank in the circular based question which I uploaded yesterday to all of you. In that the question and the circular numbers are there. Okay, now the question is whether whenever you give a loan either for under agriculture purpose, whatever may be the purpose, either for crop purpose or for land development or for allied activity, whether you have to obtain the land documents or not. Friends, obtaining the land documents is not related to interest subvention. Please keep that in mind. Please refer your HO circular 217/2020. So please refer your HO circular 217/2020. For whenever you give agricultural gold loan for the three products, you have to obtain the land record if the loan amount is rupees 1 lakh and above. Okay, for question number 61, answer is C. Since interest subvention is removed, we are under the impression that we need not obtain land records, but bank has not yet dispensed with that concept, because for 842 product codes, what is the loan amount you will give? You will give, that is it is 85% or whatever it is of the that is gold amount, 85%, or you will give the scale of finance, whichever is less. Okay, similarly for land development and allied activities, reasonable finance to be given depending upon the land which he is having. That is what your circular 217/2020 says. So for question number 60, answer is, question number 61, answer is C. To be obtained for loans above rupees 1 lakh. Question number 61, answer is C. Okay, question number 62. For a product code 842, so that is your gold loan for crop purposes. Question number 62. For product code 842, which of the following is relevant? 85% of the appraised value or scale of finance, whichever is less. 85% of the appraised value, none of these, any one of these. Answer is A. So for product code 842, the appraised value already will be up, the appraised value will be there. On that 85% you can give. When you put in the system will take care. But by taking the land records, you will come to know what is the extent of land he is having. You also know what is the scale of finance per acre, what the crop is cultivating. So whichever is less only to be given as per the guidelines in your HO circular 217/2020. So for question number 62, for product code 842, which of the following is relevant? 85% of the appraised value or scale of finance, whichever is less. Question number 62, answer is A. Question number 63. As per section 19(2), so this question also frequently they are asking. As per section 19(2) of the Banking Regulation Act 1949, a bank should not hold share in any company, whether as pledgee, mortgagee, or absolute owner, okay, of an amount exceeding 30% of the paid up share capital of that company, or 30% of its own paid up capital and reserves, whichever is less. Okay, just keep by heart it, keep it. So for question number 63, the option is A, whichever is less. Again and again, that question they are asking at some levels. So these are all your credit policy. These are all given in HO circular 850/2020 and also in the RBI guidelines. So for question number 63, it is whichever is less. So answer is A. Question number 64. Bank guarantees, this is general banking question. Bank guarantees are issued as per provisions of section 126 of Indian Contract Act. Bank guarantees are issued as per section 126 of Indian Contract Act. Okay, you can fill up there. Section 126 of Indian Contract Act. Then question number 65. Regulating loans to directors of the banks. So that question also they are asking. Regulating loans to the directors of the bank is as per which section of which act? This is as per section 21 of BR Act 1949. So what we told 21 somewhere else, what is that? Banks should not give loans against its own shares. That is also given in section 21 of BR Act 1949. So this also, regulating loans to the directors of the bank, also is given in section 21 of BR Act 1949. Question number 65. Answer is section 21 of B, that is section 20 within bracket 1, section 21 of BR Act 1949. Question number 66. Loans and advances to directors of other banks, the relatives or relatives of directors of the same bank, if it is 25 lakhs and above, then it can be sanctioned only by dash of the bank. So this question also they ask, if you are going to give to a loan to the directors of other banks or their relatives or the relatives of your own directors, then who, if the loan amount is 25 lakhs and above, then who has to permit? Only the respective board of the bank. So for question number 66, answer is board, B-O-A-R-D. Question number 66, answer is board of the bank. So question number 67. Loans and advances sanctioned to executives in the scale dash and above to be reported to the board. So loans and advances given to the executives in scale 4 and above to be reported by the bank to the respective board. So question number 67, answer is in the scale 4 and above. Question number 67, answer is in the scale 4 and above. Question number 68. Cluster-based approach is applicable for what type of advance? Cluster-based approach is applicable for what type of advance? It is applicable for MSME advance. So cluster-based approach is applicable for MSME advance. Then question number 69. This question they asked last time, maybe 2 to 3. World MSME Day is celebrated on which day? World MSME Day is celebrated on 27th June. Okay. When the World Hindi Day is celebrated, we discussed 2 days back. When World Hindi Day is celebrated, I told you it is on 10th January. Okay, that also you should remember. So World Hindi Day is celebrated on 10th January. Here the question is World MSME Day. That is question number 69. World MSME Day is celebrated on 27th June. Keep that in mind. Then question number 70. This question they asked some time back. Equitable mortgage means. So equitable mortgage means what? Transfer of interest in a specific immovable property. Option B, transfer of immovable property to the creditor. Both A and B, none of this. You know what we do in the equitable mortgage? In the equitable mortgage, the property owner comes and deposits the title deeds with you. The title name is not changed in the name of the bank. That is the registered mortgage. In equitable mortgage, so he comes and deposits the title deeds only. You register the MODD only. You are not registering the mortgage. Because why in the equitable mortgage we are not registering the mortgage? Because mortgage registration means huge stamp duty to the borrower. So that is what we are not doing. So what is the question here? Equitable. So question number 70. Equitable mortgage means transfer of interest in a specific immovable property. Transfer of immovable property to the creditor is not there. It is transfer of interest in a specific immovable property to the bank. So he'll come and deposit. The intention is to transfer it to you till the loan is cleared. If the loan is not cleared, then you have the authority to sell it on surface and then register it in somebody's name. So for question number 70, answer is A. Transfer of interest in a specific immovable property, and it is not transfer of the property. Question number 70, answer is A. Question number 71. Packing credit is available for which type of letter of credit? You know, that is whenever the letter of credit is drawn, if an advance can be taken for against that, then it is called a red class letter of credit. So question number 71, packing credit is available for which type of letter of credit? It is for red class letter of credit. Letter of credit itself will contain, so a loan can be availed. So red class letter of credit. So question number 71, answer is red class letter of credit. Question number 72, minimum number of persons in self-help group in difficult areas and self-help groups for handicapped persons. What is the normal number of persons in a self-help group? Minimum 10, maximum 20. Normal number of persons, members in a self-help group is minimum 10, maximum 20. Here the question is, for people handicapped persons, if the self-help group is formed by the handicapped persons or formed by people in the difficult areas, then what is the minimum number? Minimum number is only 5. So for question number 72, normally it is 10 to 20. In this case, it is 5 to 20. Minimum is 5, maximum is 20. Question number 73. Sprinkler irrigation system will be installed for what type of crops? Sprinkler irrigation system will be that is installed for what types of crops? Options are dense crops, paddy, sugarcane, all crops. The correct answer is answer A. Sprinkler irrigation is installed for dense crops. D-E-N-S-E, dense crops. Question number 73, answer is A. Question number 74. Internationally, LCs are governed by letter of credit. So there is foreign letter of credits. Internationally, LCs are governed by UCPDC, Uniform Customs Practice for Documentary Credit. UCPDC, Uniform Customs and Practice for Documentary Credit. Okay, so question number 74, answer is UCPDC. Question number 75. Who is the imports and exports regulator in India? Who is controlling the import and regulator in India? So the regulator is called Director General of Foreign Trade, DGFT. The controller of import and exports in India is called Director General of Foreign Trade. Director General of Foreign Trade. It is coming under Ministry of Commerce. It is coming under Ministry of Commerce, Director General of Foreign Trade. Question number 76. PMFBY, Fasal Bima, that is Yojana is there no, for crop loans. Coverage is available to what type of crops? So for the Fasal Bima, that is Yojana, coverage is available for what type of crops? The coverage is available for all crops for which production data is available. It is available, it is applicable to all crops for which production data is available, not only for your rabi or kharif, etc. For all types of crops for which production data is available with the agricultural department of the respective state governments. So answer for question number 76 is So all crops for which production data is available. Question number 76, it is PMBFY is available for all crops for which production data is available by the respective agricultural departments of the state governments. Question number 77. What security? Read the question very thoroughly. Question number 77, again I am repeating. What is the security you will take for a IBA model educational loan scheme for rupees 3 lakhs? Again I repeat. What is the security you will take for a IBA model educational loan scheme for rupees 3 lakhs? Your options are no security up to 4 lakhs, B, no security up to 7.50 lakhs, C, only third party guarantee, D, none of this. Just apply your mind, 2 seconds. Again I repeat, what is the security you will take for a IBA model educational loan scheme for rupees 3 lakhs? A, no security up to 4 lakhs. B, no security up to 7.50 lakhs. C, only third party guarantee. D, none of this. The correct answer for the question number 77 is D, none of this. What security you will take for an IBA model education loan scheme up to 7.50 lakhs? Here it is 3 lakhs. Up to 7.50 lakhs, what security you will take? You will take a security called CGFSCL, Credit Guarantee Fund Scheme for Educational Loan. It is also a security, no? If the question is asked, what collateral security you will take? If the question is asked, what collateral security you will take for an IBA model educational loan up to 7.50 lakhs, then you have to write no security. So sorry, no collateral security. The question is asked they are not asked what collateral security you will take. Again, I repeat, the question says, what is the security you will take for a IBA model education loan scheme up to 3 lakhs? So here the loan is 3 lakhs. If you give a loan up to 7.50 lakhs, you have to create a security. That security is called CGFSCL. Okay, so it is a government guarantee. You have to cover the loan there. If it is a collateral security up to 7.50 lakhs, you will not take any collateral security. Above 7.50 lakhs, you will take 100% collateral security. Above 7.50 lakhs, you cannot cover under CGFSCL. So for question number 77, answer is D. Question number 78. The provisions for establishment of CERSOI is available under which act? See, question number 78, 79. You little apply your mind and see. So the provisions for establishment of CERSOI is available under which act? So CERSOI can be established as per the provisions available under the SARFAESI Act. So question is 78. The provisions for establishment of CERSOI is available under SARFAESI Act. No problem. Question number 79. CERSOI is established under which act? These two questions they are asking. You have to apply your mind and give the correct answer. Provisions for establishment or CERSOI is available under the SARFAESI Act. CERSOI is established under which act? CERSOI is established under the Companies Act. Suppose for question number 78, the answer is SARFAESI Act. Question number 79, the answer is Companies Act. So question number, what is the question number 79? CERSOI is established under which act? CERSOI is established under Companies Act. Okay, question number 80. Very important question. Different questions will be asked from there. So you should be able, if you understand the logic, you will be able to understand. Rupee appreciated. Who is adversely affected? Importer, exporter, bank, foreign bank. Okay, these are all the options given to you. Rupee appreciated. Who is adversely affected? Okay, I will give a simple example. You just hear it. In the video also afterwards you can hear. What do you mean by rupee appreciating? I will give. See, an import. Let us assume you take an importer. What the importer will do in India? An importer will import goods from abroad. For the person who is sending the goods to him, he has to pay money, isn't it? In what currency he will pay? He will pay in a foreign currency. Let us assume I am an Indian exporter. I am purchasing goods from abroad, from America. For the exporter in America, I have to pay money. How I will pay? He will not accept Indian rupees. He wants only US dollar. Okay, I am an importer. You are the banker. Today I am coming to you. Sir, I want $1. How much I have to pay to give $1? You are telling if I want to give you $1, you have to give me 60 rupees, sir. You are telling. You are a banker. I am coming to you. I am an importer. What I want, I got to make remittance abroad, isn't it, to the exporter? So I am coming and asking you, sir, if I want to take $1 from you, how much amount I have to give? You are telling you have to give me 60 rupees. Okay, I thought it is very high level. I went off. After 3 days, I am coming to you. Sir, I want $1. I am an importer. Sir, I want $1. How much money I have to give you, Indian rupees? You are telling you give me 55 rupees, that is sufficient. What happened? See, yesterday to get $1, I have to give you 60 rupees. Today, to get the same $1, how much I have to give? Only 55 rupees. What happened to the rupee? Rupee appreciated in the international market. See, yesterday to get $1, I have to give 60 rupees. Today, to get same $1, it is sufficient if I give you 55 rupees because I am an importer. So when rupee appreciates, this is called rupee appreciating. When rupee appreciates, that means yesterday to get $1 from you, I have to pay 60 rupees. Today to get the same $1, it is sufficient if I pay you 55 rupees. That means rupee appreciated in the international market. So what happens to the importer? Yesterday he has to give you 60 rupees, but today he will give you only 55 rupees. He has benefited. If rupee appreciates, importer gains. Exporter loses. So what happened? So if rupee appreciate, you just keep one logic in your mind. Other things you can write automatically. If rupee appreciate, importer gains, exporter loses. If rupee depreciates, importer loses, exporter gains. All those things you don't keep at all. You keep only one thing in your mind. What I gave the example. Yesterday, an importer has to give you 60 rupees to get $1. Today, the importer has to give you only 55 rupees to get $1. That means the rupee appreciated in international market. When rupee appreciates, the importer gains. When rupee appreciates, the importer gains. The exporter loses. You keep that logic and all other questions you will answer. Okay, so that is the question is rupee appreciated. What is the question? Who is adversely affected? When rupee appreciates, I told you importer gains, exporter is affected. So answer for the question is exporter. Question number 80, answer is exporter. Question number 81. Inward remittance is received in your nostro account. In question number 81, you read. Inward remittance. Sorry, I'll read the question. Yeah, inward remittance is received in your nostro account in US dollar. What rate would you apply for conversion into Indian rupees and credit to customer account? So always in the foreign exchange, you have to keep yourself in the place of a banker. Always in the foreign exchange transaction, you keep yourself in the place of a banker. Today, India is quoting direct quotation. What is direct quotation? $1 is equal to this much rupees. Okay, buying rate, selling rate you are having. $1 is equal to this much. So that is what direct quotation. So suppose if the foreign exchange fluctuation takes place, the same $1 is maintained, the Indian rupee only different amount will come. The amount will change. So India, today they are following direct quotation. In direct quotation, the unit of foreign currency is fixed as constant. The variation in the foreign exchange is represented only in the Indian rupees. So in the case of a direct quotation, what is the dictum? Dictate means buy high, sell low, or sell high, buy low. You keep yourself in the place of a banker. So $1 is, there are two rates are given. Let's assume $1 is 60 rupees. $1 is equal to 65 rupees. So today the rate is $1 is 60 rupees. $1 is 65 rupees. What is the buying rate for you and what is the selling rate for you? So what do you mean by selling rate for you? you will sell the foreign exchange. So when you sell the foreign exchange, customer will give you the Indian rupees. You are selling the foreign exchange. What is the buying rate for you? You will buy the foreign currency from the customer. Customer will give you so you will get the foreign currency from the customer, and in turn, you will give the money to the customer. So in the direct quotation, buy low, sell high is the concept. In the direct quotation, in India, we are having the direct quotation. In the direct quotation, the concept is buy low, sell high. Okay, that concept you should keep in mind. So in direct quotation, foreign currency is fixed as constant. Variation is shown in the Indian currency or domestic currency. These questions they will ask. So always you keep yourself in the place of a banker. Then you have to decide. So in direct quotation, the banker will apply the logic buy low, sell high. That means so he will buy the foreign currency, give less money. He will sell the foreign currency and take more money from the customer. Buy low, sell high. That is a logic. Here, whenever some remittances are already raised, there are two types of rates, TT rates and bills rate. So TT rates is you are having the money. So customer is coming and giving the money to you, foreign currency. You are buying the foreign currency. Immediately you are giving the Indian currency to him. Whereas in the case of a bill, the bill has to go abroad and it has to be accepted. And so many things are there. Okay. Always. So in the case of an instant payment, like FCNR money has come. So if you want to convert FCNR rupees in Indian rupees, already you are having the foreign currency with you. In the case of a DD, foreign DD, already your cover money has come in the nostro account. In all these types of immediate cases, you will apply either TT selling rate or TT buying rate. You will not go for bills. Only when the export bills discounted, etc., you will go to the bills rate. Here, whether you have to apply TT selling rate or TT buying rate. What has happened? Foreign currency has come. So as a banker, what you have to do? You have to take the foreign currency from the customer and give him Indian rupees. So what you have to do? You are the banker. Banker, what you are doing? You are buying foreign currency from the customer and giving Indian rupees to him. That means you have to apply TT buying rate. So for question number 81, again I repeat, inward remittance is received in your nostro account in US dollar. What rate you would apply for conversion in Indian rupees and credit to customer account? This is TT buying rate. Okay, question number 81, answer is B. This type of questions in between, whatever may be the scale they are asking, so it is TT buying rate. If you know the logic, you can answer the question. Then, the question number 82, the financial transaction under which long-term or medium-term export bills are discounted is called factoring, forfeiting, securitization, takeout financing. Answer is B. Just to keep that answer. So let us not worry about it. When you come for the credit class, we will discuss. For question number 82, answer is B. So we have to finish 100 questions today. Then question number 83. When level of sales of your firm, we are discussing question number 83. When level of sales of your firm is such that neither it is making profit, not incurring loss, it is called break-even point. So for question number 83, when sales, it is neither making loss or making profit, that level of the equilibrium point, that point is called break-even point. Question number 83, answer is D. Question number 84, import of merchandise in a month is US dollar 200 million and the exports of merchandise is US dollar 160 million. The difference of US $40 billion is called. So what is the import of merchandise? Goods. You are importing goods and you are exporting goods. When you import goods and export goods, the difference between the two is called the balance of trade. The difference between goods, you are importing goods and you are exporting goods. The difference between import of goods and export of goods is called the balance of trade. There is another concept called the balance of payment. You would have heard. What is that balance of payment? See, we are not only importing goods or exporting goods. We are also importing services. We are also exporting services. Isn't it? That is also there. So besides goods, import and export of services is also taking place. Isn't it? For example, a foreign airline comes and lands in Indian airport. So immediately you go, that is Indian Airline, India Oil, and that is Indian Oil Corporation will go and fill the fuel over there. and then it do be only Indian people will do all the services for the flight, so that is loading, uploading, only our people are doing. This is called a service. Okay, so when goods are sold and goods are imported and exported, only goods, the difference between the two is called the balance of trade. Put together both goods and services imported and exported, our airline goes there. The work is done by them, isn't it? For that, some money to be paid. So when both goods and services are imported and exported, the difference between the two is called the balance of payment. Okay, both net services and goods, balance of payment. Only goods, merchandise. Merchandise means only goods. Goods, it is only balance of payment. So the question number 84, the answer is balance of, question number 84, answer is balance of trade. Balance of payment you should not fix. Suppose if they put import of merchandise and services in a month, you should have put balance of payment. So question number 84, answer is A. Question number 85. Which one of the following is not part of a contingent liability for a bank? There are two types of liabilities for a bank, major. What is that? Non-fund based limit and then fund based limit. So what is a fund based limit? Today you are giving a loan, debiting the customer's account, advances to customer, whatever GL is there, and crediting his SB account or issuing a DD to him. So that is called the fund. Immediately it is reflected in your advances in your balance sheet under advances to customer. This is called the fund based limit. Sometimes the banker issue LCs, guarantees, etc. So the amount LC and guarantee you are not issuing, the amount will not be reflected in your advances to customer. It is shown as a contingent liability. That under LC or guarantee, it will become fund-based liability only when the borrower is not fulfilling his contract with some other fellow. That fellow will invoke the guarantee on you. At that time, you will debit advances and then that is make payment to the other fellow for whom you are given the guarantee. Okay, the question, what is the question? Which one of the following is not a part of a contingent liability of the bank? Which one of the following is not a contingent liability? Read the question. So you should always see whether it is a negative question or positive question. Here it is a negative question. You see the question. Which one of the following is not a part of a contingent liability for a bank? Letter of credit issued on behalf of a customer. It is a contingent liability. Okay, what is the question? Which one of the following is not a contingent liability? So A is the contingent liability. A is not the correct answer. B, bank guarantee issued on behalf of a customer. That is also a contingent liability. So that is not the correct answer. Answer C, forward contract entered for sale of a foreign currency to the customer. That is also not a fund-based limit. It is also not a, it is not a part of the contingent liability. You see, which one of the following is not a part of the contingent liability of the bank? So C is also a contingent liability. A is a contingent liability. B is the contingent liability. C is also a contingent liability. You see D, documents negotiated under letter of credit. What do you mean by documents negotiated and letter of credit? That is, a person has exported goods. He comes and gives the bills to you. You are discounting the bill. Documents discounted under a bill or documents negotiated under a bill. What you do? You discount the bill and give credit to the customer. So what happens? It is a fund-based limit. Okay. The question is, which one of the following is not a part of the contingent liability? A is the contingent liability. B is the contingent liability. C is also the contingent liability. D, documents negotiated in letter of credit. It is not a contingent liability. It is a fund-based liability. The remaining three are non-fund-based limit, whereas point number D is a fund-based limit. Answer is D for question number 85. Question number 86. Which one of the following match correctly with regard to compulsory registration certification with respective authorities? Okay. So which one requires compulsory registration? That is the question now. Your options are A, bill with the code. See whether all the wills to be registered with the court? No, it is not necessary. Even in a death claim manual or a recent HO circular, they have not told will created only in certain cities, they have to be registered with the court authorities. Okay, all the wills need not be registered. What is the question? Which one of the following match correctly with regard to compulsory registration? Will with the court? No. Will need not be compulsorily registered. Only in certain cases it has to be registered. So will need not be compulsorily registered. Okay, A is not your answer. B, B, partnership deed with registrar of firms. Partnerships need not be registered. Yesterday we told you, even for unregistered partnership, you can deed. Okay, registration of, but what are all the drawbacks which we already seen? So what is the question? Which one of the following match correctly with regard to compulsory registration? A, it is not compulsory. B, it is also not compulsory. C, let us see. Equitable mortgage with sub-registrar of assurances. Yesterday we had discussed the point. So in the same question paper, so mortgages other than equitable mortgage to be registered with the sub-registrar of assurances within 4 months. Yesterday we saw, isn't it? Section 59 of the Transfer of Property Act, or section as per so and so section of 108 Indian Registration Act. Yesterday we saw. So equitable mortgage need not be registered. Which need not be registered? Will with the court need not be registered. Partnership firm need not be registered with the registrar of firm. Equitable mortgage need not be registered with the sub-registrar of assurances. Then what about D? Sale deed of immovable property with sub-registrar of assurances. Yes. So if you are selling a property, for example, you are buying a property from somebody, there will be a sale deed. Based on the sale deed, bank will give the loan, and the sale deed has to be registered. Isn't it? There's any sale deeds with the immovable property. Whenever somebody is buying or selling the immovable property, based on the sale agreement, you will give a loan. Then the sale deed will be registered with the sub-registrar office, and you will get the original sale deed with you. So which one compulsory registration? Point number D requires compulsory registration. Sale deed of immovable property with sub-registrar of assurances. For question number 86, answer is D. Question number 87. When tax audit under section 44AB of Income Tax Act is compulsory for a business unit? You know, so when you are analyzing the balance sheet, etc., when the customer has to give, that is tax audit under section 44AB. So a lot of confusions are there. So here they say, if the options are annual turnover is ₹1 crore and above, annual turnover is above ₹1 crore, annual turnover is ₹2 crore and above, annual turnover is ₹2 crore. So 4 options are there. The option is A. That is, if the annual turnover is 1 crore and above, then that is tax audit is compulsory under section 44AB of the Income Tax Act. So the tax audit will be done. He will give the profit and loss account. Then you have to compare what he has given with the tax authorities, whether it tallies with the balance sheet. Okay, the income what he has given under section 44AB with the Income Tax Authority, whether it tallies with the income or turnover, the 3A, 3BC, they will give, that you have to compare with the balance sheet. Okay, so for question number 87, the answer is tax audit is compulsory if the annual turnover is ₹1 crore and above. One more question they will ask here. This is for business turnover. You know, there are certain professionals who teacher is a professional. I am a teacher. So professionals are, for example, doctors or lawyers. They are all professionals. In professionals, they will not get turnover. The concept there, it is called fees, professional fees. Okay, a doctor will get a professional fees, isn't it? So tax audit to be conducted for professionals when that is fees they are getting, if it is 50 lakhs and above. That question also, if they ask, you should not miss, maybe 3 to 4 or 2 to 3. So tax audit to be conducted for a business unit if the annual turnover is 1 crore and above. In the case of a professionals, tax audit to be conducted if the annual fee what they have received is 50 lakhs and above. Okay, so both under section 44B of the Income Tax Act. For question number 87, answer is A. Question number 88. Foreign exchange inflows create liquidity which is neutralized by RBI through The answer, correct answer for the question is market stabilization scheme. Question number that is 87. So question number 88. Answer is C. Just note down the answer. That is sufficient. Question number 88. Foreign exchange inflows create liquidity which is neutralized by RBI through a mechanism called market stabilization scheme. For question number 88, answer is C. Question number 89. The term core capital or going concern capital in the context of Basel III represents which of the following? You know, there are tier 1 capital, tier 2 capital. In the first class, we saw various slides. Or you know, maybe the slide may be here. The term, there are two types of capital, tier 1 capital and tier 2 capital. Tier 1 capital is called core capital. Tier 1 capital is called core capital, or it is also known as going concern capital. You should know the terminologies they may ask. Tier 1 capital is called the core capital. Then what is tier 2 capital? If they ask, you should not miss it. No. Tier 2 capital is called supplementary capital. Tier 1 capital is called core capital. Tier 2 capital is called supplementary capital. So question number 89, answer is A. Question number 89, answer is A. Question number 90. Under section 17 within brackets 5 of RBI Act, RBI provides finance to central and state governments to tide over temporary mismatch in expenditure and receipts at repo rate plus 2%. The duration of the loan is 10 days for central government and 14 days for state government. See, you know, now during the pandemic, central government has not given the GST. Central government is telling you borrow from RBI, the state governments. Lot of issues are there. No, you see the scheme. There is a scheme available under sections 175, 17.5 of RBI Act. Suppose if they ask, so okay, anyway, we'll finish the question. Then I will go different type of question what they may put. Under section 17.5 of RBI Act, RBI provides finance to central and state governments to tide over temporary mismatch in expenditure and receipts at repo rate plus 2%. The duration of the loan is 10 days for central government and 14 days for state government. This finance is called, the name of the finance is Ways and Means of Finance. Ways and Means, W-A-Y-S, Ways. W-A-Y-S, Ways, and A-N-D, and Means, M-E-A-N-S. Ways and Means of Finance. Here, if they ask you in another way, under which section of which act the ways and means of finance is provided by RBI, you have to tell section 17.5 of RBI Act. That is why I given section 17.5. Suppose if they ask, what is the rate of interest RBI charges for ways and means of finance? You have to tell repo rate plus 2%. Any question will come. Suppose if they ask, what is the maximum number of days ways and means of finance is given to central government? It is 10 days. For the state government, 14 days. So from here, any type of question asked, so you should know 17 within brackets 5 of RBI Act, repo rate plus 2%, 10 days for central government, 14 days for state government. This is called ways and means of finance. Okay, question number 91. Mr. A is having a deposit of 5 lakhs with your branch. He is also having another deposit in joint names of Mr. A and Mrs. A in your branch for another 5 lakhs. What is relevant with regard to DICGC in respect of these deposits? Cover is available in both the deposits. Cover is available to any one of the deposit. Cover is available to deposit in the individual name, none of these. So that you know, the DICGC cover, whatever may be the deposit the customers are having, maximum amount covered under DICGC is only 5 lakhs with the interest. So you may have 20 lakhs, you may have 25 lakhs in a bank. The DICGC is applicable each bank. It is not branch wise. It is only bank wise. You may have deposits in same Canara Bank, different branches, but they look into how much deposit you are having in a Canara Bank as a whole. You same custody, no? There is a concept of custody. So if the deposit is the name of A, so A will get max. If there is something goes wrong in the bank, so A will get a maximum DICG coverage to the extent of 5 lakhs, or the deposit whichever is having, whichever is less. Suppose A is having a deposit, first he is having a deposit in his name, he will get 5 lakhs. If he have a deposit A Mrs. A, he will get, that is A Mrs. A, that deposit will get separate 5 lakhs. Suppose Mrs. A, that deposit will give separate 5 lakhs, isn't it? So in what name and style the deposit is that? That is a criteria. In the name of A means A, that deposit will get 5 lakhs. A and B, so the deposit will get 5 lakhs. B and A, the deposit will get 5 lakhs. A and C, the deposit will get 5 lakhs. Okay. So on the other hand, the DICGC coverage is not applicable to government deposits. It is not available to government deposits. It is not available to foreign bank deposits, etc. It is not available. It is available only to the deposits in the name of individuals. Whatever different styles it is, that different 5 lakhs you will get. Till last year it was 1 lakh. Now it is increased to 5 lakhs. So questions may come maybe for 1 to 2 single level. So for question number 91, answer is A. Question number 91, answer is A. Anantha Krishnan, I want the PowerPoint. It's just 2. I'll tell you the slide. Last few slides here. Tell the slide number. You go last. It is slide number. You go to slide number 1 minute. 64. Round பண்ணிட்டீங்களா? அவ்வளோ என் ஸ்கிரீன்ல வருது. ஸ்கிரீன் ஷேரிங் தான் கொடுக்க மாட்டேன். ஸ்கிரீன் ஷேரிங் கொடுக்கலையே. ஓகே, அப்படி இல்லைன்னா கொஸ்டினை படிச்சுட்டு நாளைக்கு பார்த்துக்கலாம். ஓகேவா? Okay, keep the question paper. Okay, friends, there is some issues in the screening the slides. We will discuss tomorrow. We will again rediscuss it. Okay, so now question number 92. So we will discuss the answers only. In depth, we will discuss it tomorrow. Question number 92. What is not relevant with regard to provision for standard assets? Friends, keep in mind, provision is not only for NPA. So we are discussing question number 92. We are discussing question number 92 in test paper 2. So the question number 92 is which is not relevant with regard to provision for standard asset. Friends, you know the provision bank has to keep for NPA in the recovery class. If I am going to discuss, I will discuss it there. Bank has also keep for provision for the standard asset also. What is the provision bank has to keep for standard asset? Bank has to go, head office will keep. Even though the advance is not an NPA, banks have to keep provision for the standard asset. What is that? In the case, you know, agriculture is divided into farm credit, that is agriculture infrastructure, and then one more concept is also the agriculture ancillary activity. Agriculture farm credit, infrastructure, agriculture ancillary activity. The PowerPoint also maybe which you already made available to you. In the case of an agriculture, if it is farm credit, so now we are discussing what is the provision for standard asset. If it is agriculture farm credit, the provision is 0.25%. If it is agriculture farm credit, the provision is 0.25. If it is MSC, you know MSME, I'm not talking about MSME. Out of MSME, MSC, I'm talking about MSC. If it is MSC, the provision for standard asset is 0.25. So for two cases, the provision for standard asset is 0.25. What are they? One is agriculture. In agriculture, if it is farm credit, it is 0.25. In MSME, if it is MSC, the provision is 0.25 for standard asset. Then there are two concepts known as commercial real estate and commercial real estate residential housing. What is commercial real estate? Loans given by banks for construction of very big complexes like cinema theater, shopping mall, etc. Okay, that is called commercial real estate exposure of a bank. So when the loans are given to commercial real estate, what is the provision for standard asset? The provision for standard asset is 1%. Then we are having a concept known as commercial real estate residential housing. What is that commercial real estate residential housing? Banks give loan to builders who construct various dwelling flats and they will sell it to others. That is called commercial real estate residential housing. If the loans given is for commercial real estate residential housing, the provision for standard asset is only 0.75%. Again, I repeat, for agriculture farm credit, it is 0.25. For MSC, it is 0.25. For commercial real estate, it is 1%. For commercial real estate residential housing, it is 0.75%. Then individual housing loans sanctioned on or after 7th June 2017. Individual housing loans sanctioned on or after 7th June 2017. The provision for standard asset is 0.25. If the housing loan is sanctioned before 7th June 2017, the provision for standard asset is 0.40. All other standard assets, it is 0.40. Again, I repeat. If it is agriculture farm credit, if it is MSC, if it is individual housing loan sanctioned after 7th June 2017, for these three things, the provision for standard asset is 0.25. If the loan is for commercial real estate, the provision for standard assets is 1%. If the loan is for commercial real estate residential housing, the provision for standard assets is 0.75%. In all other types of advances, bank is having a lot of other advances, no? In all other advances, for standard asset, the provision is 0.40%. Looking at slides, we are not able to display now, and you will show it. Already the PPT is made available to you. Night you can go through. Now let us see the question. Question number 92. We are discussing question number 92. Which is not relevant to provisions for standard asset? So this is a negative question. How to answer the negative question also, I will tell you now. Which is not relevant in the negative question, in the examination, the not, as I have put here, they will put in bold letter. That means it is a negative question. So what is not relevant to provision for standard asset? Agricultural ancillary activity, 0.40. Whether it is relevant or not relevant, it is relevant. Agriculture farm credit is only 0.25. I told you all other standard assets other than these four, it is 0.40. I already told you. So agriculture ancillary activity, whether it is relevant or not relevant, it is relevant. So you should not tick that. So next point. Personal loans 0.40, that is also relevant. All other loans 0.40, I told you, no. Personal loans 0.40, that is also correct. Venture capital 0.40, other loan, that is also correct. What is the question? MSME 0.25. You see the question? Question number 92. Which is not relevant with regards to which is not relevant? When the question is asked a negative question, you have to choose a wrong answer. When the question is a negative question, you have to choose the wrong answer. They will give correct 2-3 answers. One wrong answer they will give. If the question is a negative question, you have to choose the wrong answer. See, what is a negative question? Which is not relevant. Agriculture ancillary activity 0.40, that is relevant. Question is not relevant. So A, you should not take. Personal loan 0.40, that is relevant. You should not take. Venture capital 0.40, that is relevant. You should not take. MSME 0.25. I told you MSME is not 0.25. MSC is only 0.25. Here they have put MSME 0.25. That is not relevant. So wrong, negative question, wrong answer you have to choose. For question number 92, answer is D. For question number 92, answer is D. Question number 93. Which one of the following with regard to provision for standard asset does not match? Again, it is a negative question. Again, it is a negative question. You have to choose the wrong answer. Correct answers will be given. One wrong answer will also be given. Otherwise, they will give none of these. If all options are correct answer, they will give none of these. You have to choose the none of these. Okay, here let us see. Which one of the following with regard to provisions for standard asset does not match? Housing loan sanctioned before 7th June 2017, 0.40%. That is correct. Housing loan sanctioned after 7/6 only 0.25. Here what they are given, housing loan sanctioned before 7th June 0.25. It matches correctly. Commercial real estate residential housing 0.75. It matches correctly. Agriculture infrastructure 0.25. I told you agriculture farm credit is only 0.25. Agriculture infrastructure is all other loans 0.40. So option number C does not match correctly. What is option number D? Canara pension 0.40. Correct? No, all other loans 0.40. That is not, that matches correctly. Last option, all match correctly. No. Out of these things, point number C does not match correctly. So it is a negative question. For negative question, wrong answer is there, you have to choose the wrong answer. Or if none of this is there, you have to choose none of these. Or if they mention all correctly, you have to choose all correctly. Here, point number C does not match correctly. For question number 93, answer is C. Question number 94. So this question they are asking frequently, maybe for 3 to 4. The provision for standard asset is kept in balance sheet under which head? So these are all the provisions. No, this is a provision totally bank will arrive at where they will keep. The provision for standard asset is kept in balance sheet under a head called other liabilities provisions others. I'll again repeat. The head is called other liabilities and provisions. Other liabilities and provisions hyphen others. Other liabilities and provisions hyphen others. If you see the balance sheet, you will get a heading. So the provision for standard asset in balance sheet, it is kept under which head? Other liabilities and provisions dash others. Okay. Now question number 95. The individual housing loan portfolio disbursed on or after 16th October. The question will be coming. So this question definitely there will be a change here. So you will get the question because RBI master directions. The individual housing loan portfolio disbursed on or after 16th October with less than or equal to 80% of LTV ratio for a bank is rupees 5,000 crores. What is the risk weighted asset for this portfolio? Friends, due to the pandemic, that is Reserve Bank of India has there is a concept known as risk weight with regard to advances given by the banks. What is risk weight? You just keep in mind, risk weight means the capital bank has to keep for an advance. What is simple you keep, let us not elaborate it further. You just keep in mind, risk weight means the capital bank has to keep a particular type of advance. Okay, so risk weight for housing loans given to individuals depends upon the LTV ratio. Okay, for loans given for individual housing loans given by the banks on or after 15th October 2020 up to 31/3/2022, not 2021, 2022. Again, I repeat. So what is risk weight? Risk weight is nothing but the capital the bank has to keep for all advances. Okay. So now Reserve Bank of India is telling risk weight for individual housing loans sanctioned on or after 15th October till 31/3/2022 has to be kept back based on the LTV ratio of the housing loan. What is LTV ratio? LTV ratio is nothing but loan to value ratio. So loan quantum in the numerator, security value in the denominator. So loan quantum in the numerator, security value in the denominator. That will give you the LTV ratio. Now I will ask you a question. What is LTV ratio? Loan to value ratio. What is loan amount or liability on the numerator? Denominator is a security value. Okay. If the LTV ratio, if it is less, whether it is good for the bank or bad for the bank. Just 1 second, you think. LTV ratio means loan or liability divided by the value of the security. If the LTV ratio is less, whether it is good for the bank or bad for the bank. If the LTV ratio is less, that means what? The denominator, if the LTV ratio is less, it means what? The denominator is more. That is, value of the security is more. So if the LTV ratio is less, then it is good for the bank. If the LTV ratio is more, then it is not that much good for the bank. Lower the LTV ratio, lower the risk and lower the capital the bank has to keep. Again, I repeat, lower the LTV ratio, lower the risk and lower the risk weight or lower the that is capital the bank has to keep. I told you risk weight just to keep in mind as capital. Lower the LTV ratio, it is good for the bank, less risk for the bank and less capital. Higher the LTV ratio, more risk for the bank, more capital for the bank. Okay. So as per Reserve Bank of India guidelines, with effect from 15th October 2020 up to 31/3/2022, the risk weight for individual housing loan is linked to the LTV ratio. If the what they say, if the LTV ratio is less than or equal to 80%, if the LTV ratio is less than or equal to 80%, the risk weight is 35%. Again, I repeat, if the LTV ratio is less than or equal to 80%, the risk weight is 35%. If the LTV ratio is more than 80%, less than or equal to 90%, the risk weight is 50%. Again, I repeat, if the LTV ratio is less than or equal to 80%, the risk weight is only 35%. If the LTV ratio is more than 80% and less than or equal to 90%, the risk weight is 50%. These two things Reserve Bank has come out. What is LTV ratio? 80%, 90%. What do you mean by that? What do you mean by LTV ratio is 80%? LTV ratio is 80% means the promoter's contribution is 20%. That is a margin. LTV ratio is 80% means promoter's contribution is 20%. If the LTV ratio is 90%, promoter's contribution is only 10%. Okay, that is the concept called LTV ratio. So if the LTV ratio is less, the value of the security is more, the promoter's contribution is more, the risk weight for the bank is less, risk is less, risk weight is less. If the LTV ratio is more, then the value of the security is less. That means the promoter's contribution is less, the margin is less, more risk for the bank, more capital or more risk weight. That is why Reserve Bank has told if the LTV ratio is less than or equal to 80%, then the risk weight should be 35%. If the LTV ratio is above 80% or less than or equal to 90%, then the risk weight is 50%. So they are not given another table. That means every housing loan should have minimum 10% margin. So LTV ratio is above 80% and less than 90%. That means the LTV ratio should not be more than 90%. It should always be less than or equal to 90%. If it is less than or equal to 90%, more than 80%, then in that case, 50% is the risk weight. If it is less than 80% or equal to or less than 80%, the risk weight is only 35%. Risk weight is nothing but capital. Let us see the question now. The question number 95. The individual housing loan portfolio, disbursed on or after 16th October with less than or equal to 80% LTV ratio for a bank is 5,000 crores. What is the risk-weighted asset for this portfolio? So what is the risk weight for if the LTV ratio is less than or equal to 80%? The risk weight for less than or equal to 80%, the risk weight is 35%. Okay. So a bank has given various housing loans after 16th October. The housing loans which are having LTV ratio less than or equal to 80% is 5,000 crores. A bank has disbursed housing loans after 15th October. Out of these housing loans, the housing loans which are having LTV ratio less than or equal to 80% is 5,000 crores. So 5,000 crores is the asset where the LTV ratio is less than or equal to 80%. So the question is, 5,000 crores is asset. The question is, what is the risk-weighted asset? Risk-weighted asset means asset multiplied by the risk weight given by Reserve Bank of India. I told you, when the LTV ratio is less than or equal to 80%, for housing loan sanctioned on or after 16th October, the risk weight is 35%. So asset is 5,000 crores. In the example it is given. The risk weight is 35%. So you have to multiply 5,000 crores into 35%. You will get answer 5,000 into 35%. You will get an answer of 1,750 crores. I told you, what is risk weight? Risk weight is nothing but capital. If your housing loan to individuals where the LTV ratio is less than 80% or equal to 80%, you have to keep 35% capital. For 5,000 crores, you have to keep 35%. 5,000 into 35, 1,750. That is, for 5,000 crores housing loan, it is sufficient. Since the risk weight is only 35%, it is sufficient if we keep a capital of 1,750. For example, this 5,000 crores, let us assume, is LTV ratio is more than 80% up to 90%. In that case, how much capital you have to keep? 5,000 into 50%, 2,500 crores. Isn't it? So higher the LTV ratio, that is more risk for the bank, promoter's margin is less, security value is less, more the capital. Lesser the LTV ratio, more security, more promoter contribution, that is more margin, less risk and less risk weight. So this question will come, not the same question, the ratios will come. They will put in any other manner. That is why I explained the entire concept to you. What is LTV ratio? So as per the guidelines, the LTV ratio for individual housing loan should not be more than 90%. It should be 90% or less than 90%. Okay, that means the minimum margin should be 10%. Minimum margin should be 10%. Okay, you see next question, 96 question and 97. So, and then, okay, 98 also we will see. Then the other three questions, when the PowerPoint is made available next class, we will see. We will see 96 today. 96, 97 and 98. Okay. For individual housing loan, sanctioned after 16th October 2020, bank has kept a risk weight of 50%. The LTV ratio for this loan should be in between dash and dash. You see the question? For individual housing loan sanctioned after 16th October, bank has kept a risk weight of 50%. When you will keep a risk weight of 50%, when the LTV ratio is above 80% or less than or equal to 90%, the risk weight for individual housing loan sanctioned after 16th October is 50%. So here what they are given? They are given the risk weight. How much risk weight bank has kept? Bank has kept 50% risk weight. If the bank has kept 50% risk weight, what should have been the LTV ratio? The LTV ratio should be, that is more than 80% and less than or equal to 90%. So the answer for the question is question number 96. The LTV ratio should be in between, that is more than 80% and less than or equal to 90%. If you see the slide PowerPoint which is already made available to you, you'll come to know. Next class I will show it to you. So the individual housing loan LTV ratio should be more than 80% and less than or equal to 90%. Okay, that is the fill up the blanks for question number 96. Question number 97. If the LTV ratio is 68%, what is the promoter's margin? I told you what is promoter's margin. LTV ratio, out of 100, LTV ratio is, that is 68% means the remaining 32% is the promoter's contribution. 100 minus 68, 32% is the promoter's contribution. More the promoter's contribution, less the LTV ratio, less risk and less risk weight. That which I already explained. So question number 97, answer is 32%. Question number 98, a MSE loan is covered fully by CGT MSE cover. What is the risk weight for this loan? Anyhow, this is available in the next slides, but your slides, some issues have happened. We'll work it out. So the MSE loan, we'll read the question number 98 and we'll stop it today. For a MSE loan is covered fully by CGT MSE cover. So I told you, bank has to keep capital. Bank has to keep capital for all types of loans. How much capital the bank has to keep? If it is for individual housing loan, that depends upon the LTV ratio. For other types of loans, bank has to keep capital. That is called the risk weight. How much capital bank has to keep for different types of loans, different types of risk weight is that. That is in the PowerPoint. Next class, I will explain to you. Suppose if a loan is guaranteed by the central government, if the loan is guaranteed by the central government, whatever amount of loan the bank gives for that loan, the bank need not keep any risk weight. That is, the bank will not keep any capital. Again, I repeat, for all types of loans, bank has to keep capital. That is called the risk weight. Okay. For individual housing loan, if the loan quantum is less than, for individual housing loan, the risk weight depends upon the LTV ratio. If the LTV ratio is less than or equal to 80%, the risk weight is only 35%. If the LTV ratio is more than 80 and less than equal to 90, the risk weight is 50%. Two slabs are there. This is for housing loans sanctioned on or after 16th October 2020. Question will come there. Then for all other types of loans also, bank has to keep risk weight. How much percentage of risk weight to keep? For this type of loan, this much risk weight you have to keep. That is that in the slide it is that. Tomorrow we will show you again the slide. Now the question is, in the case of the government guaranteed, central government guaranteed, you know, that is your CGTMSC or CGFMU, they are all coming under central government guarantee. If your loan is fully covered by the central government guarantee, CGTMSC, etc., in that case, banks need not keep any capital for these types of loans. There is no risk weight for them. The risk weight is zero. Even recently, the GECL, the GECL loans you are giving, 20% about certain levels, etc. during the pandemic, that is also fully covered by the central government guarantee. For that loans also, there is no risk weight, zero risk weight. So for question number 798, MSC loans up to 200 lakhs, you can cover under CGTMSC. Up to 10 lakhs, so that is you will naturally you have to cover under CGFMU or CGTMSC, whatever it is. Up to 200 lakhs, so you can cover under CGTMSC. If it is covered under the CGTMSC to that extent, so since it is fully guaranteed by the central government, the risk weight is zero. For question number 98, a MSC loan is covered fully by CGTMSC cover. What is the risk weight for this loan? Risk weight is nil. Okay, friends, we will stop with this today. There is some disruption because we could not show the PowerPoint. Again, these last 4 slides, very, very important slides. I will definitely show it before I commence the next class. Maybe whenever the opportunity is given to me, we'll see that, we'll set it right, we'll make available to you. Again, when I repeat to you, you will understand immediately before going to bed. You go through the PowerPoints, which I already made available for test number 2. You will get an idea. I will further explain to you. Then the next question is, yesterday I have posted circular based questions. 2 question papers I have posted. Up to recent circulars I have filled in that 2020. You have to download those circulars. You have to download those circulars. You have a time of 3 weeks. You have to go through the circular. You have to tick the answer. The idea is, if some other questions are asked on the circular, you should not draw a blank over that. People are asking me, give the answer, sir. We give the answer, sir. Within 1 minute, I will give you the answer. Okay, it is not. So the idea is to make you, at least during this time, I have not given 855 circulars were issued by HO till yesterday, till last week. So I have cut short. I have made some important circulars. Download those circulars. Handwrite app is there. At home you can download. You can go through the circulars. Any other question also asked there also, you can go through. Similarly, for test paper 1 and test paper 2, people are asking me the question. The videos are a lot of difficulties the OA has taken, and they uploaded the videos overnight. They work on that. They upload the video. If you go through the video, you will get the answers for all those questions. Anyhow, at the appropriate time, I will post the questions along with the answers, whatever we are discussing now. Thank you very much. Till next time we meet, good night to all.
Thank you, sir. Thank you. Good night. Good night, sir.
Okay.
Log out, sir.